Have you ever bought something and immediately thought, well, that was either genius or incredibly dumb? Yeah, that's me with Ethereum right now, because I just bought even more Ethereum somewhere in this weird, sideways depressing zone, which historically might be actually the sweet spot. This isn't a "this coin is going to the moon" video, but in this video I'll show you 5 things that convince me that this might be the right time to buy Ethereum, even if it doesn't feel like it. And hopefully by the end you'll either say, oh, that's interesting, or this guy is crazy and I'm shorting Ethereum immediately. Sounds good? Let's jump into it. So yeah, let's just look at the chart that everyone hates right now, Ethereum versus Bitcoin. It's been bleeding for years now, no momentum and a total downtrend. Right now it is sitting around 0.03, and if you only look at the line, it looks like Ethereum has been quietly dying for 2 years. But let's zoom out a bit, and that's actually the exact same behavior and actually the same spot this ratio takes before flipping. We have seen it in the past cycles. Ethereum and altcoins were bleeding slowly while everyone got depressed, and while Bitcoin reached new all-time highs. Then everything rotated suddenly, money flowed back into Ethereum and altcoins, and they outpaced Bitcoin very hard. And of course, this ratio tends to bottom when nobody cares. And right now, that's the vibe. Ethereum maxes are quiet, Bitcoiners are smug, altcoin people are coping, and retail investors don't even care. Which tells me we might be close. This is one of those unremarkable spots that doesn't scream buy, but ends up being one of those pivotal points in hindsight. Now let's talk about timing. Every major crypto cycle follows a pattern. Bitcoin runs first, Ethereum follows, then the altcoin euphoria kicks in, and that's been the structure since the previous 2 cycles. Right now, Bitcoin has already had its turn. We had the ETF approvals back then, institutional money inflow like crazy, price moved, and every month hitting new all-time highs. Ethereum, on the other hand, also has ETFs approved all over the world, crypto is finally getting some legal clarity in the US, and institutional money invested. But the price is still sitting at the starting line. This delay isn't exactly new. The same situation happened before in 2020, but this time the lag is longer than usual, which is why everyone thinks Ethereum is dead. And what usually happens next? Ethereum catches up, and sometimes it catches up so fast, like up to X, while you're still deciding if it's time to buy fast, you know? And here's the most suspicious thing. Institutions are buying Ethereum like it's on sale, but Ethereum's price is barely moving. Strange, right? Institutions are quietly accumulating, Ethereum-based funds getting massive inflows, but what's even more interesting, private companies like SharpLink and others are literally building Ethereum treasuries. We are talking about hundreds of millions of dollars in Ethereum allocations here. And get this, some Bitcoin mining companies, they are starting to diversify by adding Ethereum to their treasuries, and a few are even switching over entirely to Ethereum validation instead of Bitcoin mining. We've also got a steady stream of Ethereum flowing off exchanges, either into cold wallets or straight into staking. Staked Ethereum is at an all-time high right now, but the price still boring, and this kind of situation where smart money is clearly positioning, but retail still doesn't care. That's usually where the best opportunities start to build. Alright, next, the chart nerd moment. And yeah, this one I shamelessly borrowed from Benjamin Cohen. If you look at the Ethereum's logarithmic regression band, you'll notice a pattern that's popped up in every cycle. Quick explainer. This band shows Ethereum's fair value range over time based on its historical price action. When price touches the bottom band, it's usually considered undervalued. Middle band, that's your accumulation zone. And if it breaks above the top band, we are probably getting into speculative territory. Historically, Ethereum has hit the lower or middle part of this band right before big moves. It happened back in 2016, before that insane run, again in 2020, right before the last cycle took off. And few months ago, it touched that middle band again, we bounced, and now Ethereum nearly doubled from there. Right now, we are still holding above the regression band, and if we keep holding it, that alone signals a trend flip, especially when you consider that Bitcoin is already at all-time highs, while Ethereum is still mid. So, from a long-term value perspective, Ethereum might be the better bet at this point in the cycle. which is why I already swapped some part of my Bitcoin to Ethereum to catch the potential upswing moment. Okay, now let's step back and talk about macro. Rate cuts aren't here yet, but they are really close. Inflation is cooled down, unemployment is slightly rising, and honestly, the Fed is starting to look like it's just holding rates high out of habit. And here's why it matters. When rates fall, risk appetite returns. Capital flows out of cash, out of bonds, into assets with higher upside potential, and in crypto of course. Ethereum usually catches the first real wave of it. Last cycle, rate cuts have been like rocket fuel for Ethereum and altcoins. So, if the Fed even hints at easing soon, that alone could flip the vibe. And yeah, I'd rather be positioned for that before it happens, and no chasing green candles after Fed's next press conference. Also, just between us, if you peek at the Fed's balance sheet right now, there is something interesting happening. While QT technically isn't over, the balance curve is starting to bend. It's flattening out, and that's usually the signal. And at the moment that balance sheet starts curving back up, we're heading into QE. And if you remember what happened the last time when the Fed went full QE mode, you know how fast crypto can react. So yeah, I bought Ethereum at the so-so moment, not at the bottom, not at the top, just in the middle of the cycle, where most people hesitate. It's unsexy, it feels a little bit risky, but not chaotic, because this is the kind of setup that worked in the past cycles. If it drops, will I buy more? Probably. And what if I was wrong? You can roast me in the comments, but I think I've seen this before, and usually this is the part where most people look away and then FOMO 3 months later. So thanks for watching, don't trust the market, don't trust influencers, trust only yourself, and see you in the next one, hopefully in this one.